Support and resistance, S&R, is an important concept in the day-to-day work of a trader that helps reduce the and find more accurate points of entry to the market. What is support? It is a level or zone, which works as a sort of an obstacle against the downward trend of the price. Resistance, therefore, is the level of zone that acts as an obstacle against price growth. This article will provide a simple and effective method of finding the support and resistance levels, zones using a free indicator available for the popular MetaTrader 4 platform. The hazard of this strategy is that it will cause losses during sharp movements. Therefore, you probably should avoid using it during the release of important news, shown by the arrow above. Level width, from 1 to 10. 1. The indicator will show narrow levels 20, wide zones. Frequency, this setting determines how tightly the levels are placed. More tightly less, the most significant levels are shown. Sensitivity, how quickly can the level be considered broken? High, in order for the level to be considered broken, a minimum number of fractals need to appear after it. Lower sensitivity of the indicator for the level breakout. Display period, this setting determines the number of candlesticks on the history that is analyzed. Short equals 300 candlesticks, long equals 1200 candlesticks. The breakout, this strategy implies the sale of the asset once its price breaks the support level and purchase of the asset once the price breaks the resistance level. It is rational to apply this strategy at the start of European and American, when expecting important news and when the price is within a narrow range for a long time. The breakout test, this strategy uses the mirror level principle, i.e., after the breakout the resistance works as support and the former support becomes resistance. The chart above shows how during the downward trend, the blue support levels, after the breakout, offered resistance to the growing prices, thus providing opportunities for entering a short position. Which of the three strategies should be used? There is no definitive answer to this question, as system listed above cannot be just right or wrong. They all will provide profitable and false signals. Try using each of them on a demot to see which one suits you the best. Most importantly, cut the growing losses and evaluate profit growth potential. Support and resistance is one of the most widely used concepts in trading. Strangely enough, everyone seems to have their own idea of how you should measure support and resistance. Let's take a look at the basics first. Look at the diagram above. As you can see, this zigzag pattern is making its way up a market in quad. When the price moves up and then pulls back, the highest point reached before it pulled back is now resistance. Resistance levels indicate where there will be a surplus of sellers. When the price continues up again, the lowest point reached before it started back is now support. Plotting support and resistance levels. One thing to remember is that support and resistance levels are not exact numbers. Oftentimes you will see a support or resistance level that appears broken, but soon after find out that the market was just testing it. With candlestick charts, these tests of support and resistance are usually represented by the candlestick shadows. Notice how the shadows of the candles tested the 1.4700 support level. At those times it seemed like the price was breaking support. In hindsight, we can see that the price was merely testing that level. So how do we truly know if support and resistance were broken? There is no definite answer to this question. Some argue that a support or resistance level is broken if the price can actually close past that level. However, you will find that this is not always the case. Let's take our same example from above and see what happened when the price actually closed past the 1.4700 support level. In this case, the price had closed below the 1.4700 support level but ended up rising back up above it. If you had believed that this was a real and sold this pair, you would have been seriously hurting. Looking at the chart now, you can visually see and come to the conclusion that the support was not actually broken. It is still very much intact and now even stronger. Support was breached but only temporarily. To help you filter out these false breakouts, you should think of support and resistance more as zones rather than concrete numbers. One way to help you find these zones is to plot support and resistance on a rather than a candlestick chart. The reason is that line charts only show you the closing price while candlesticks add extreme highs and lows to the picture. It's like when someone is doing something really strange, but when asked about it, he or she simply replies, "Sorry, it's just a reflex." And quad. When plotting support and resistance,